York, and here with me today is Bourassa, CEO of Nemaska Lithium. Guy, thank you so much for joining us today.
My pleasure.
All right, so to start, we're here at PDAC. Before we talk about Nemaska specifically, I wanted to ask you your thoughts on the current lithium market. What have been some of the trends you've seen so far? How are you finding the space this year?
Well, I still find the space very interesting. Increasing demand for high purity lithium hydroxide and carbonate for the market outside of China. There's currently an oversupply of technical grade carbonate in China that's affecting the price in China for carbonate. But the rest of the world, the Western world, the car manufacturers, battery manufacturers, serving the rest of the world need good quality product, and they're struggling to find good, reliable source of supply. So my outlook for the lithium space is very positive.
All right, so let's talk about Nemaska Lithium. Most of the people that are watching us today, they know that you recently announced a financing shortfall for your project. I guess my first question to start is, looking back at that situation, are there any steps in the process where you say we could have done something differently? What is the lesson learned going forward, maybe that other juniors could learn from?
I don't think we would have done anything differently at the time. I think that all of the information we had, 43-101, but on top of 43-101 feasibility study signed by 12 QPs, people have to understand that in the last 18 months, we have been working, trying to finance this project with potential partners, potential off-takers, real off-takers, banks, and the bonds. We have underdone maybe 10, 12, 15 due diligence, coming with 5 due diligence reports by outside international firms. Nobody raised any question about the budget. There was even one of these reports that said that we had too much budget, so that it was large enough. So given the market at the time, given the information we had, the database that we used, we would not have done it differently.
Right, and yesterday you actually gave a presentation about how difficult financing might be for lithiums that have vertically integrated projects. How confident are you that you will be able to raise this $375 million? And maybe looking at the larger lithium market, where will this money come from for new projects?
Yeah. Well, I'm very confident about the, even with the deception that my shareholders and the shareholders of the company have expressed, deception, we're very disappointed too at the management level and the board level, of course, but we're fortunate enough to have been developing a good, solid institutional investor base since 2016, when we started raising capital for the construction project. So at some point, we did not reassess the mineral reserve, we did not have an issue, this is not caused by a problem with the process, it's a shortfall. Okay, so the asset is still very good, the market is still very good, and the outlook is good. So we'll find a way with our actual investors to fund the gap that we need going forward. I'm sure everybody knows that we have signed offtake agreements for 5 years for now 50% of our capacity. So we need to honor these, and the market needs these. So we know you were asking about my outlook. All of the clients that we have currently were requesting and are still requesting more material under the contracts we have. So we know that there's a demand. We know that we represent a very good, reliable, well-located, geographical, in a stable country. So we look at the future very, very brightly. Now, if you're asking me about the challenges of financing a vertically integrated project, the issue is the size of the financing you need. So it's a lot easier, I would say, to finance a spodumene concentrate production in Australia, because at the end of the day, you're only trying to raise 250 to 300 million. When you're talking 1.1 billion, now it's going to be close to 1.3, 1.4 at the end of the day. That's challenging in a sense. The fact that we also have a new process to do directly lithium hydroxide, that created additional challenges. We were We were fortunate to think and finance the construction of a phase 1 plant in the past that we're still operating since February of 2017. So that reassured people to our capacity of deliver product of high quality. As a matter of fact, we just recently started sending lithium hydroxide monohydrate from the phase 1 plant to an additional 22 potential clients that have requested samples to start the qualification process. So it means that there's a market, there's an interest for good quality product, and since April 2017, we have delivered on a continuous basis very high purity material. So that helps also in the raise of additional capital. It proves how strong the project is and that we can deliver.
Now, we can say there's some negative sentiment right now in the market. Does your capital raise strategy change? Does your approach change when trying to find this last 375 million?
Well, it's going to be directly dictated by the large shareholders of the company, what direction they want to take. At the end of the day, management works for the shareholders, for the company, but for the benefit of the shareholders. And we're working hand in hand with the major stakeholders, major shareholders, to find the best solution for the benefit of the company, of course, of the project. But like I said earlier, the quality of the project remains untouched. We do believe we're going to be able to deliver this budget and still be on time on the construction schedule, yes.
All right, and on the demand side, we continue to hear that there's strong demand for the lithium sector. China continues to be the leader in this space. Do you see or do you expect Canada in particular to step up and further help you with your project, with other projects within the country, just to see if there's an opportunity for Canada itself to
There is a big opportunity for Canada. It's not a question should Canada. Canada must step up to the plate and take its role, its position. We have spodumene deposits in Ontario and, well, in most of the provinces of Canada. We don't have yet a conversion capacity. So we would be forced to sell spodumene concentrate to the Chinese, increasing their control over the finished product. So there is a need to establish a conversion facility. That's exactly what Nemaska is doing with its vertically integrated project that would help unlock the value of smaller deposit around North America, Eastern North America, and all of Canada that cannot alone justify building their own chemical plant. So once we are built in Shawinigan, we will be able to buy spodumene concentrate coming from Canada. My dream is that Canada in 5 years from now represents about 10% of the overall lithium supply. And I think we can easily achieve that if we put all our hands on deck and that we deliver the construction completed of Shawinigan.
All right. And I've been hearing that the market is changing a little bit in terms of going for lithium carbonate. Are you really sold on the idea of lithium hydroxide for your project?
Well, that's the benefit, one of the additional benefit of our process. We have the flexibility to produce both. So we take the spodumene, we transform it in lithium sulfate, we do the electrolysis, and then at the end you have a mother solution of lithium hydroxide that you either crystallize and make monohydrate, or you bubble with CO2 and you make very high purity lithium carbonate. We have that flexibility. We still do believe, however, that even if people are starting to think that in China they will come back or stick with the carbonate, I do believe that Western car manufacturers, battery manufacturers, still going to be looking at higher density, energy density batteries, requesting hydroxide instead of carbonate. So, but we can adapt, and that's the whole business case of Nemaska. Have the flexibility with its process to produce at will, immediately, one or the other, depending on the demand.
Right. And for the investors that are looking at Nemaska Lithium's project, why would you say you have the right management team to actually move this project forward to production?
Oh, because we've been able to attract a lot of newcomers, well-seasoned experienced mining operators that have lived through numerous startups of new mining projects around the world. So we have built a very experienced team that is going to start, they have completed their readiness plan for the mining operation. Pre-stripping and site preparation is to start in May and June this year to be ready when the construction ends over the mine site in October. So we do believe that we have the right team. You cannot achieve selling or contracting 50 to 70% of your production without being built in advance to very first tier clients without having the right management team.
And so what's next? What now for Nemaska Lithium? You were mentioning that you send the samples to potential customers. What will happen while you wait for this financing to come through?
Well, first, we're not going to wait for the financing. We're going to take the steps together with the board of directors to find the best solution to fill that gap, in trying to make it as fast as possible, but in the best interest of the company, to make sure that we stick to the calendar of execution. So the mine in production by October of 2019, and we're still targeting August, September of 2020 for the chemical plant. So we're not sitting here with our arms crossed. We work very hard to settle that. Our sales team is dedicated to follow up on the qualification process with the over 20 clients that have potential clients that have requested. We still are operating the phase 1 plant, so phase 1 plant is running smoothly. It's still targeted to be in production for the whole year. We have enough material for them to transform in lithium hydroxide. We're starting to receive interesting calls by clients that want small quantities. So the phase 1 plant might be able to supply a couple of tons here and there, so that the name of the company and the quality of its product starts to spread all over the world.
All right, and my final question for you today, for the investors that are watching us today that might be interested in the lithium space, what would be your best suggestion while they learn about lithium? What mistakes they should try to avoid when jumping into the space?
Well, they certainly should look at more advanced project, so less risky. Of course, needing more capital, but make sure that you think that they can finance, because there's a lot of company that will not be able to finance because the market is not there, because the project is not advanced enough, because it's not well located. Do your homework, make sure that you understand what the company really represents, how risky or de-risked it is, and make your decision based on this.
All right, Guy, thank you so much for joining us today.
A pleasure, like usual.
All right.
Thanks.
Once again, I'm Priscilla Barrera with the Investing News Network, and here with me today was Bourassa, CEO of Nemaska Lithium.